Investors and traders, welcome to the channel. Today is 2nd of June 2024. I hope everyone is having a great weekend. This video will be taking a look at the key US markets. This video is going to be a little bit longer than the normal videos because we will be covering a lot of things. We will take a look at the dollar index. We will take a look at the US Treasury yields, gold and silver. And then we'll look at the foreign markets, mainly European markets, FTSE 100 and the German DAX. Then we'll also take a look at the sectors, so that will be the energy, financials, housing, consumer discretionary, transporters, and utilities, and also the staples. And then we'll move on and take a deeper look at the US stock indices, and towards the end of the video, I will also give you this, which is basically the weekly and the daily ranges to be expected for next week and tomorrow, i.e. 3rd of June, the daily ranges. As always, this video is for educational purposes only and it is not a financial advice. So what we are looking at is the daily chart for the Dow Jones Industrial Average Cash Index. And here, this is the timing model that we have been following for quite some time. It has had a pretty good record. It picked up pretty good dates, most recently the 1st of April, and around the 23rd of February, around here, it was indicating a mild downward move. So we saw the market retrace a little bit and mostly a trading range. And really, most recently, the key date that we were watching for was around the 29th of May, with the 2 to 3 trading range, trading days on either side. And what we have seen is the market pulled back right into the Fibonacci 78.6% retracement. And last Friday, we saw a bullish candle formation for the index, and we'll cover some of the other indices as well. And on Friday, did a quick video about this. So the key thing is that the Fibonacci retracement of 78.6% was held right at the time where we were expecting for a possible good low to come in, and when the price meets time, the pattern is complete. So as long as the 78.6% retracement is not broken to the downside for the Dow Jones Cash Index, and we have this trend line formation here, so rising highs here, they are rising, so higher lows, in other words, we should be expecting the market to move higher. And should these levels and trend line is broken to the downside, then the correction continues. And we also have another key date which comes in on the around the 1st of July 2024. All right, so this is what we are watching for, and we did get a pretty good result per our expectations. In fact, it was pretty spot on. All right, so now we'll start by taking a look at the dollar index. So quick look at the daily chart of dollar index. 107 is a pretty important high for the index. And here, double top formation here, a double top formation here as well. And also with respect to this, the market pulled right back into support, which is coming in from the 200-day moving average and also the 89-day moving average. And here we also have a bit of a trend line going like this. And what is really interesting is that last Wednesday, 29th of May, the market actually took out this swing high by a little bit. That's for the 23rd of May. So the chances are maybe it is actually moving in an ABCD formation, this pattern, and go and target 105.50. So the dollar could actually get a little bit stronger. But if this trend line is broken to the downside, this would be an indication for weakness, much more weakness coming into the dollar index. So the US dollar is likely to be weaker compared to a basket of currencies. And we'll just have a quick look at the Euro USD. So the important thing will be actually breaking below this 200-day moving average on 2 consecutive daily closes we'd like to see. And also this trend line formation. Then we could have this bigger ABCD, which could take the dollar index towards the bottom of this trading range. And if we were to look at this on the Euro USD, which is not exactly a mirror image, but it is about 51% of the dollar index. So here the key thing is that we had a very strong support come in around the 106 level. It was the 1.272 expansion plus 1.618 expansion. So you see these cyan colored pattern formation, and also the 1.618 with respect to this, excuse me, 1.272 and 1.618 with respect to this range expansion. And also it came with an ABCD formation. You can see this one in the black here, plus a 78.6% retracement of these lows from the October of 23 to the highs of 28th of December. So whenever we have a confluence of these many ratios and patterns coming together, is always something we pay really close attention to, because these usually tend to be pretty strong support or resistance depending upon the direction of the market, and here it tends to be a pretty good support. And this is what we have seen the market actually moving higher, putting in a bottom around the 16th of April, and we are now here pretty much is 3rd of June now, so it's been a while. And what we see here in this recent price action, the market is actually in a range. It's a pretty wide range for a forex market, but the fact is it is in a range and it's above this trend line as well, and it is finding support from the 89-day period moving average and just the 200-day period moving average around here as well, and we can see a flag formation. Now what is really interesting will be this swing high top, which is roughly around 109, we can say, so 1.08955, so 109 in other words. And if the market is able to get above this, I think it's gonna go right into this gap formation that we see, and then possibly even take out these highs of around 110. And then I think the trend, this will be a CIT change in trend, so we'll get a confirmation. So we'll then have a look back and we'll be like, oh, okay, so 16th of April was actually when the CIT was triggered, i.e. the change in trend, and then we get a further confirmation once it begins to move above 110 level. So this is kind of the macro formation that we could be looking at. And remember the macro that we are working with for the summer of 2024. I don't have the diagram with me at the moment, but we are looking for the dollar to be moving lower, and then we are also looking for yields to move lower, which is actually supportive of risky assets to stocks. And then also with a weaker dollar, the gold should appreciate, at least in price in the dollar terms. So that's the kind of macro we think might be developing for the summer of 2024, moving into the fall, i.e. around September. Now let's take a look at the yields. So we'll start by taking a look at the 2-year treasury bond, treasury note, and this is the yield chart. So on the y-axis, these are yields, this is not prices. What is really key is we believe that we have actually a head and shoulder formation like here. So left shoulder, head, right shoulder, and there's pretty good symmetry between the left shoulder and the right shoulder with respect to the head. And what we have seen is the yields find resistance from the 78.6% retracement around the 502 level, and then the yields actually found some support possibly from this 200-day moving average on the daily chart, and went right to the 78.6% retracement, and for the 2 consecutive days it is actually closing lower, in fact, since 29th of May. So these are 3 consecutive daily closes which are negative, as in like the yields are closing lower compared to opening. And it's right, there's a really minor support because of the 20-day period moving average. But the key thing is that should it begins to get below the 4.833, which is the 38.2% retracement, excuse me, let me draw it again here for you guys. Let's do this smaller swing here. Here we go. Yeah, so I think, yeah, 4.889, pretty much where the market is right now. So if we begin to see further closes lower, then it's going to come back down towards the range here. And this is the really key one, because we have this 38.2% retracement of this low to high coming around 4.7 and breaking below that. Then we think we are actually in this ABCD move lower, which could see the yields move as low as 3.9%. And on the longer end of the curve, we have some improvement coming in terms of yields as well. So the price actually formed a retracement. Let's see what this retracement was. Looks to be a 61.8%. Yeah, it actually went much lower. It's 78.6% retracement, pretty deep retracement. I actually did not like this price action at all. But it's stuck in a range. This is the thing. 113 to 118 is pretty big range, 5 points range for the market, and the market as big as this one. So watching really closely, if it is able to get above this swing high of 118.22, above this channel high, then I think we are actually be moving into the CD leg, which could see the yields move much lower on the longer end of the yield curve as well, and which should be supportive of the risky assets, and in particular the stocks, because the money has to move somewhere. So if it's moving out of the bonds, maybe it's going into stocks. So we'll have to wait and see. But this is the way it might be actually setting up. We are just waiting for further confirmation. And if we look at the TLT, which is the iShares 20 plus year treasury bond ETF, we're really waiting for the 92.40 to be broken to the upside. So there is some resistance coming from the 200-day period moving average, and that has capped this rally. And of course we have this 38.2% retracement resistance coming in as well, and this trend line coming in here. So a number of things that it needs to break, and once we get above 92.40, that's going to be a good sign, because that would also mean the bearish symmetry, which is essentially whenever the market rallied about this much, the sellers came in and moved the market lower. It will also be negated, meaning that the market's characteristic is changing. So that will be a further positive development, and much like the pattern that we see in the 30-year long bond futures, we actually start a leg higher. Moving below this, of course, we have some support around the 78.6% retracement, 86 below that, of course, the lows, and this means that in fact we are in a pattern which could see the prices move much lower and the yields much higher. Ultimately, the bonds are in a bear market, but we could have an ABCD style correction in a bear market. So this is what we are kind of anticipating, at least for the summer of 2024, and maybe a little bit longer as well. That's a possibility. All right, okay, so now we'll actually take a look at the gold market. Here we go. So this is the daily chart of COMEX gold, and this is, if you're looking at the spot market, this is not the spot market, it's the futures market, so the prices are a little bit different. So this analysis is being done on the COMEX gold, not spot gold. So just want to make that clear for you guys. What we were watching last week for the gold market was actually this timing coming in between the Friday before, so that's 24th of May and 30th of May, and what we have seen is basically a range bound market. Now the key is that it does not break below this 78.6% retracement, which comes around 23.20, because that would indicate that there is further downside, and the timing that we were playing it, maybe there is a bigger cycle which is actually pushing the price lower. So we could of course then see a retest of 22.85 or maybe possibly even lower. So the key thing is to watch for 23.20, which is 78.6% retracement from a timing perspective for this little cycle here. We have actually met that window as of last Thursday, Friday. But again, it remains a range bound market, and this was a pretty significant sell-off, and the market actually pretty much remains within this range. And if we look at this on the weekly chart, here we go. So on the weekly chart, what we see is we had some key levels coming in around the 23.75 and 24.20, and the market has just gone sideways in a trading range. It's a pretty large trading range between 22.85 The tops coming in around 24.50. Um, on the upper side, we do have other targets as well, because this market is actually pretty bullish. Eventually, it'll top sometime. I don't know exactly when. But the targets that we are looking on the monthly charts are around 2700. So there's a pretty good chance that the market could actually um, target this. And the reason is that this is the month of May monthly chart. And if we look at the high that came in 24.54 spot 2, and here the high was 24.48 spot 8. So it actually, in month of May, it made a higher high compared to the month of April. So it is start a new wave or a new trend higher. So maybe it just goes through some consolidation, a little bit of retracement, and then ultimately, I believe the market will start a move. 2500 is something which a lot of participants are looking for, but I think in this cycle we could actually go as high as 2700 on average. We have some figures coming in between 2680 to 2715, so I just rounded off to 2700. So this is what the gold market is likely to do. Quick look at the COMEX silver. And yeah, this is also just a range bound market. Eventually it needs to break above the swing high, and it remains supported at 30.25 from 38.2% retracement. Pretty wild swings in the silver market. Silver market is much smaller than the gold market. And its contract, the silver contract is $5,000 a point. So this is a lot of volatility in this market, but it remains supported. Here you can see the trend line, you can see moving averages kind of fanning out. So price is above 20-day, which is above 89, which is above 200. So I think this 38.2% is going to remain as a pretty good support, and we still see some sideways price action, but probably we are going to break to the upside. Looking at the monthly chart, okay, here I do mention quarterly, but this one is a monthly chart, because normally I was tracking this on a quarterly basis, but the key thing is we finished the month of May. So it's also good and important to look at the monthly chart, because the month just finished, and you can clearly see that here we go, the month closed above this swing high, and of course closed above the 1st of April, so last month of April, which is pretty good. And we have this ABCD activated, and here we are looking for 34 to around 35.50 roughly, and some higher targets above that as well, but the ABCD is pointing towards higher prices. So eventually I think silver will break out of this trading range, most likely the upside, and the targets that we had a look at in the monthly chart will become activated. Okay, now what we'll do is we'll start by taking a look at some of the foreign markets, and then we'll take a look at the sectors. So let's take a look at the German DAX. This is daily chart of German DAX. We had a brief look at it last Friday. Very, very interesting, because this is the harmonic expansion that came a while ago, around the 10th of May. So beginning of May, and the market just went sideways for a number of days. It was being supported at 18,630, and then we had the second leg lower. So it has done an ABCD. It is 1-to-1 price projection right at the 38.2% retracement. So it's a bullish looking chart, and just the expansion of this one, the 1.618, comes around 19,160. This is what we are looking that this market is likely to get to that, and we could have a bigger ABCD, which could take the market move a little bit higher. But taking one thing at a time, shorter term, I think the chances are we are heading towards 19,160. And if we begin to break the 38.2% retracement and have a deeper correction, then things can change a little bit. Then we could have an ABCD, which could in fact something like this, which still might take us there, in that ballpark figure. But if the market actually begins to move higher from 38.2% retracement, that's a very bullish looking chart then, because in a strong trending market, 38.2% retracement is a very good support level if the market is moving higher. Then we take a look at FTSE 100. This is the market of quality stocks, 100 stocks in the United Kingdom. And here, this market completed its ABCD and retraced to about 50%, and then two consecutive really bullish closes. So it's a little bit stronger, although after a deeper pullback compared to the German DAX. And one of the key things that I would like to point out is it was around the 16th of April when the markets in Europe, German DAX, and also the FTSE 100 bottomed in Europe right at the 38.2% retracement and had this explosive move, which was an ABCD in the FTSE. And the markets in the US, they actually bottomed around the 19th of April. So Europe is leading at the moment, and this is what we have seen as well. So FTSE, for example, in particular, was very strong right at this 38.2% retracement, and German DAX was quite strong as well. And we are seeing a similar kind of scenario playing out with where this FTSE 100 bottomed on the last Thursday, 30th of May, at two bullish candles above 38.2% retracement. So the thing is that I did complete this ABCD here, but we have a bigger one which can actually take us to around 8600, because we have this 1.618 expansion of this range high to range low here. I just took an average kind of low around here. So 8600 looks like might be on the card, unless we get a much deeper correction in FTSE 100. It breaks its trend line to the downside, moving below the averages. That would change the narrative. But one thing is the momentum needs to improve a little bit, because of it was a pretty steep correction here for FTSE. So here the 20 period moving average is above the price. So I think the price is going to go and reclaim that. And once the price begins to move or close above the 20 period moving average, we'll have a pretty good momentum being set up for this market then. Okay, so now we are going to move towards the US sector. So let's start with XLE, which is the Spider Select Energy, and this is the ETF XLE daily chart. So now, guys, this is something which we were monitoring and mentioned. I've got my spelling wrong. I don't know where this D came from. So breaking below 91.30 is bearish, but I should be a little bit more precise that we'd like to see at least two consecutive daily closes. So it did break below that for a day, but then there was no follow through. So this is the important thing, and market has just moved back into this range again, and is right touching the 20 period moving average. And if it begins to close above 20 period moving average, then I think the energy might be in play. And then all this was just a correction with a pattern called three drives to a bottom, and there appears to be a pretty good symmetry in this. So let me actually do this. So 1.618 came right where the 38.2% retracement was, and then if we do this, let's see what sort of I believe it will be the 1.272, and boom, right at the bottom. So we do have a three drives to a bottom pattern formed here. So let me actually try to highlight it for you guys like this, and then another one like this. Here we go. So pretty good support here for the XLE, and not too far below the 38.2% retracement. So it looks like the energy might be coming back into the fashion, and that bearishness that was possibly coming in, it might not come into fruition now. and we could have an ABCD like higher. So this is very interesting. So I think we should also begin to take a look at some of the individual energy stocks, maybe in a different segment. But the crude oil still remains pretty weak actually. But if the stocks are doing something different, that's gonna be very interesting. So looks like this 1.272 expansion of this range did cause a pullback, more like a channel formation as well. So we can kind of draw a channel, not a perfect channel. There is a lot of overshoots here. And if we just copy this and move it in a parallel fashion here. So yeah, if it begins to break above this channel, it looks like more like a bear flag. Yeah, I think we could be starting a leg higher. So energy looking very interesting. It did not close, or there was just no follow through below 91.30. So really important that 38.2% retracement still intact. XLF. I am not going to go into too much details of XLF because I've done a detailed video for the key US banking stocks, and XLF is an ETF which we covered detail, but just the pattern formation on the daily chart, I think looks like we are in these ABCD cycles higher, and then there is some resistance coming around 43, so that's a target we're looking at, and then above that 43 to 44. One key thing is, let me actually draw this retracement. Let's see if it actually yep, so it closed above 38.2% retracement. So in my opinion, I think we are in this ABCD formation higher, so we could expect higher prices with XLF. Okay, now let's take a look at the HGX. Improvement is what I see. So even the Philadelphia housing sector index has improved, and this is something which is fairly in line with the move that we have seen in the yields, especially for the 2-year treasury note. Let me see if I'm able to put it and then we can have a look at an analog here, and let me, here we go. There we go. So you can see this is where a turn came in, and look, it moves higher. So there is definitely a correlation going on, in particular where we have basically, especially at the shorter end of the curve, a move lower in yields results in move higher. So here we go, like this, and then what we have is a move higher like this. And these are some of the turning points here. Here we can see 29th of May, and we have seen the yields turn lower, and then we see basically a doji kind of a formation and an island reversal. So this is actually an island reversal, which is a pretty strong, one of the stronger patterns that exist. So that's pretty good for the housing sector index. And now it's just countering some 20-day period moving average, some resistance over there. And we've already looked at the 2-year treasury note, so follow that, because this means that it will be, it is having, there is correlation, like an inverse correlation between the two, which exists at the moment. Now, if we take a look at the consumer discretionary XLY. Okay, so here we go. Not too much of a, well, there seems to be some correlation, but not that much in between the XLY and the 2-year treasury note. But in general, if the yields are moving lower, then what we are looking at is this improvement coming in. So I'm gonna remove the this analog right now, and we can see this is actually in a pretty big trading range, and here yeah, I think it still needs to improve, but some bullish looking action coming in last Friday, which is good for consumer discretionary related stocks and above a 200-day moving average, but just really range bound price action in this one. And then if we take a look at the staples, which is the XLP, and there we go. What a strong looking candle! What a strong looking candle here. Um, this is pretty strong looking chart, and if you compare it with the consumer discretionary, you have your answer where the money is actually going, because this is staples. This is like the kind of stuff people need, and the investors are aware of it in a higher inflation environment. Discretionary stuff, could be expensive electronics, could be luxury cars, luxury clothing, might struggle a little bit, but people still need to have the essentials, like what they eat and do on for living on daily basis. So this is like a strong looking chart here, and I believe it found support around 50%. There we go, and a very strong looking, very strong looking candle, which has of course broken the if there was a resistance from 38.2% retracement. So it looks like there is a chance this one might actually make an attempt towards the um, top of the range. Here we go. So where this big box I've drawn, this high coming in from April 2022. So maybe it's gonna go and make an attempt to do that. Pretty strong looking chart. Look, this trend line is in place. It speaks for itself. Now let's take a look at the transporters. This is Dow Jones Transportation Average Index, and look, there you go. Bullish looking 2 days here. So again, let me put the yields on it. Let me actually go get that US02. This is the 2-year trading note, and let me actually, oops, so it's not giving me the, I don't know why it's doing it like this. Maybe I need to change regular. It did not work. Percentage, it's kind of working, but not exactly the way I wanted it to be there. Okay, I'm gonna get rid of it. I'll try to figure it out. But there you have seen that. Oh, there we go. There we go. So what we can see is essentially when the yields started moving higher. Let me try doing this here. I think, yeah, here we go. When yields start moving higher, we see the transportation go sideways, and then when they continue moving higher, then we eventually see the range being broken and moving down in the transportation index. And here you can see a bottom or a top coming in the yields, and we saw a few days later. So the key is that there needs to be follow through in the yields moving lower. So it's not going to be a 1 or 2 day phenomena. So it looks like the market sees if there is a continued weakness or continued yields moving lower on daily basis, for example. So maybe a week or something, maybe a couple of weeks or 10 days. Then the transportation begins to move higher. And then when it begins to reach a stage where this deceleration in the yields is actually declining, then we see a sideways market happen. And then here we see an inverse head and shoulder in yields, and yields move higher, and this index eventually begins to move lower. So there we go. So there's a lot of theory out there with regards to transporters, that Dow Jones Russell theory, and we see that the reason could be because of the yields, so interest rates moving higher. But if the expectations are for the yields to move lower, or when eventually Fed begins to lower the interest rates, so I think we'll begin to see a rally coming in the transporters. And evidently last couple of trading days we have actually seen pretty good closes here, because it makes sense, because we have seen the consumer discretionary improving, because a lot of these goods, for example the physical goods, they are being transported, maybe they are developed outside of the country, and they need to be brought in. That's all transport related. Then you have the ocean freight, you have air freight, you have the ground transportation and everything. These companies are part of this index. So of course, with the yields moving lower, the consumer discretionary or the spending for um, consumers in general is likely to improve, which should then help improve these companies involved in making these products, which need to be moved. So that should just help out the transporters. That's my view on it. So again, another way to also look at this is there's a nice trend line in play, and there's this bigger head and shoulder pattern that we spoke about. There we go. So left shoulder, head, right shoulder. There's very nice symmetry, and we could have something similar developing again. Oops, let me actually get rid of this one. So here we go. This could be like a left shoulder and head, and then we could have this is the right shoulder being developed. So pretty nice symmetry between both, and then rising trend line. I see this as a massive trading range. I don't really see the distribution, so I don't think we're at the top of this. And it's all related to the interest rates and the yields, and if the expectations are for the yields to move lower because of the interest rates being cut by the Fed, even one or two cuts, I think that should massively improve this index. All right, then really important. Let's take a look at the SOX. This is the Philadelphia Semiconductor Index. This one is a really important one because often it leads for the bottom and top formations. And here, of course, market had a pullback. This one had a pullback. But I see it being really well supported in terms of the retracement moves. So here, let's actually take this low, this high, and see what was the retracement when it happened. And that was 38.2% retracement. It doesn't have to be perfect because there was just no follow through the downside, just one fake out day. Momentum remains strong, so I think we are going a little bit higher. These are shorter term targets, 54.70 and 57.90, 1.272 expansion and 1.618 expansion. And then on the weekly charts we could have even higher ones, but we'll just take one thing at a time. And then SMH, this is the VanEck Semiconductor Index. Some people like to actually follow this one, but it's very similar to what the SOX are doing. And if we just try to do a so I think we saw the pullback in this one, 250 from 1.27 to expansion. We could also reach to 265 as a shorter term target. And if we were to look at the retracement from the lows of October of 2023, here we go, and there we go. So right at the 38.2% retracement. So I think this index seems to be a little bit more fluid. So we'll closely follow this one, and also SOX will cover both of them. So there we go. Now we'll begin to take a deeper look into the stock indices. Do apologize, the video is getting a little bit longer, so I'll try to be a little bit quicker now. And let's have a quick look at the VIX index. So last Friday, something happened other than that the timing came coming out for us for our timing model. Look at the collapse in VIX. It went right to the 20-day period moving average. It was getting above it. So that's something really interesting to watch. It's getting back towards the lower end of this trading range in the middle of this move here. So VIX moved lower, stock indices moved higher, and that pretty much happened towards the close of the day, trading day. Now let's take a look at the S&P 500 cash index. Here we go. So last Friday we were discussing this on the daily chart. What we have is the market pulled right into the 38.2% retracement, and then it found good support from there. Price remains supported by a 20-day period moving average, which is above 89 period moving average, which is way above the 200 period moving average. And we have this nice trend line intact, which is this purple. There was a possibility maybe the price could tag this one, but looks like unlikely now because of our timing and 30.2% retracement. As long as this is in place, this 30.2% retracement, personally, I think we are moving higher. This is what I think, that we are moving higher and we might have completed the correction. And the shorter term targets are these reclaiming old highs, so 53.50 to 54.59, 54.60 on the daily chart. And then if we take a look at the weekly chart, here we go. One thing I would like to point out is, let me actually get my scaling right, I think. Okay. Okay, I don't know why it's doing that. Let me actually bring it like this. Okay. Okay, so one thing I would like to point out is that it's got really nice trend line going in here, and that's been in there since 2020. So bullish market, the bull market is intact because this long-term trend line is not broken. That's really important. No, we did complete this big ABCD, or we are really near completing this. There are several of them. There is this black one here, and then we have this bigger ABCD, which is the blue one. So these are kind of cycles which are coming together. We saw some downward pressure coming into the market, and now I think just based on the weekly targets, 53.94, so 5400, and above that 56.50 is the kind of where the market could actually head shorter term. And it all depends upon this 38.2% retracement that we saw on the daily chart is not broken to the downside. And let's have a quick look on the ES, which is the S&P 500 E-mini futures. Daily chart, we saw the same pattern formation, same kind of conclusion. This needs to remain intact. We have to wait for a follow through. If we get a positive follow through, and especially if the highs of last Friday are taken to the upside, 54.40, 55.70 is the kind of shorter term targets that we could look for. And then here, what we're looking at is this is the weekly chart. What we spoke about, the daily chart, that remains true. So that 38.2% retracement needs to hold with a good positive follow through. We could have 54.36 and even higher 55.70, which could be a pretty strong resistance level. So that's the kind of the target. This is the monthly chart, and here the important thing is that the month of May closed, well, actually it did close higher for the month, but also it took the highs out of the month of April. So that's pretty important to actually take into consideration. Okay, now I'll try to be quick because of I'm concerned about the time for the video as well. So now let's take a look at the NQ. Okay, there we go. Found good support from 38.2% retracement, and then it moved higher. So next week we are watching for what sort of follow through we get. If we get a positive follow through, which is kind of something which we are expecting, we move higher. And on the weekly chart, we'll have some further targets. Here we go. So shorter term, we pretty much reached there, which is the 19,150 and then 19,700, and ultimately we have this 20,800. We have an ABCD completing in this zone, so 20,800 is something which is achievable if our timing and the pattern remains correct, and it's going to be a pretty massive target to achieve if it gets there. And I believe we could have a pretty good retracement from those levels because of the bigger ABCD being completed and 1.618 expansion coming in. So watching for this. And now let's take a look at a very quick look at Dow Jones futures, but on the weekly chart. So this one has been one of the weaker indices in terms of the price action compared to S&P 500 and also the NASDAQ. But the key thing is that 78.6% retracement held, although the weekly close is still negative. But on the daily chart, we saw price rejecting lower prices. This is important. So we need to see further improvement for this one. And then ultimately, I believe shorter term, we could look at 41,160. And above that, the 1.618 expansion comes in around 42,000. That's going to be, um, that could be a pretty big target. And we could see some, good pullback come in. So, but that's what we are targeting as long as the 78.6% retracement is not broken to the downside, which comes around 38,000. Last but not least, Russell 2000. It had a pretty remarkable recovery because it's also an index which is pretty weak index, and it has also a tendency to go into really long trading ranges, but it all depends upon the yields actually. So if the yields or the expectations for the yields begin is to for the yields to come down because of interest rates moving down, that should really help these smaller companies because they have a balance sheet which is not as strong as some of the bigger companies, and their financing costs really build up into their margins as well. And typically they also rely quite heavily on the regional banks, so the financing is a pretty big thing. So this is why we have seen again a trading range. Let me actually draw it for you guys like this. So the market actually went into another trading range. So it looks like it wants to go and towards the top of the trading range and perhaps even an eventual breakout. We could be looking at 2230, and then following that anywhere between 2322, even 2377 is possible. On the retracement side, let's see where the 78.6% retracement. Yeah, so here's the thing. If the market gets into this kind of a pocket here, we need to be watching this really carefully. This is a pretty big range of about roughly about 100 points. It's quite big actually, but we'll be just watching this really carefully for further price action, how it takes place. Very quickly, we'll take a look at NYE, New York Composite Index, on the weekly chart. So this one is actually stronger than the Dow Jones Industrial. This one also includes ADRs as well as I believe 2,000 stocks, or plus more than 2,000 stocks, including the ADRs, which are foreign companies. So it's also very interesting and also important to look at this at least once a week. And to me, it appears as moving in a confirmed ABCD highlighted in this blue. So we could see the price move to about 18,570 to 18,820. That's sort of the figure. So roughly targeting 1.272 expansion. Beyond that, there's also 20,000 almost at 1.618 expansion. But we'll take one thing at a time. And the key thing is that look, the price had a pullback. And if this is this, let me see, looks like it pulled back to about 50% or 61.8%. Yeah, it pulled back to 61.8%, pretty exact. And this is where the 20-day period moving averages as well. So it's just kind of also being supported by that. So it could be doing a one-to-one price projection like this. Here we go. A shorter term, which will actually coincide with this other blue one around the 18,850 kind of the level. So really interesting formations taking place. We remain bullish for the market, at least for the summer of 2024. We have also laid out in previous videos the kind of macro development with the expectations for the yields to move lower because of the possible interest rates being cut by the Federal Reserve. I do not know exactly when that might happen, but the expectations are there for at least one to two cuts, and that should actually then help the risky assets. So dollar could actually pull back, yields move lower, risky assets get supported, gold neutral to higher, commodities also neutral to higher, off the back of lower dollar, for example. So this is the kind of thing that we are analyzing. And last Friday, we were waiting for certain key timing to come in because for the possible correction to end possibly. and we have seen the timing come in, and also a nice positive close for the indices. And now what we're waiting for is a follow through, and over the course of next couple of trading days, we'll be able to assess that we got the kind of follow through we were waiting for, i.e. Indices closing higher above the key levels that we spoke about, and this could further then take us towards the targets that we discussed on the weekly and daily charts in this video. So thank you very much for watching the video. Good luck, good trading, and if you like our analysis, then please give the video a thumbs up. And if you found the way we do the technical analysis on the channel, then please do think about subscribing to the channel. Thank you very much. Good luck, good trading, and speak to you guys soon.